What's going on, good people? Welcome in for a Macro Monday live show here with the Tim Warren channel. We got some big words coming from a big guy. I don't know if he's actually physically that big. Ray Dalio. He's one of the most known economic contributors. He loves. I actually this week was talking to a couple of people who asked my opinion on what Ray Dalio thinks on the markets. And then, of course, here yesterday, he releases what I'm looking at as like a book, right? It's not actually a book, but it looks like a book was released on X. I'm going to go into that over here in a couple of minutes and show you what's going on. But big warnings issued from Ray Dalio. He says the world order is over, and kind of in his little book on X goes through not only the history of what's been, but what this looks like going forward. And it's a dire warning for anyone who has money invested. There are things you should do with your money in terms of putting it somewhere, and there's other things he says you should not be doing. We're going to break into that here a little bit in the show. We're going to look at some charts. It's President's Day here in the United States, so U.S. markets are not open. There's probably less people watching content. There's definitely less people trading the content, trading the charts. The volume is pretty stinking low. So we're not going to go crazy long here today, 20, 30 minutes, but we are live. So drop questions in chat. I probably will answer one or two questions later on in the show. As always, if you guys could do me a favor, smash like and make sure you're subscribed to the channel. I really feel like our community can get over 100,000 subscribers before the end of this year, despite the fact that it's a bearish market, right? That we are going down, but I think we can get there. I just need your help. Also, do me a favor. Maybe you're already subscribed, but you missed some of our notifications. We're putting out daily content. To make sure you don't miss anything that we put out, can you just hit that notification bell really quickly? That way you get updated every single time. You don't miss any of our content. Really helps the channel out. Let's go ahead and jump in, though, and take a look at what is going on here on the charts. As I told you guys last week, really a week and a half ago, I said, don't be surprised if we start to move into a boring period with Bitcoin. And that's sure enough exactly what's happening. We're kind of forming at the moment a little bit of a symmetrical triangle pattern. I do think there's a ceiling to the upside. You might be saying, Tim, this is a boring pattern. Just how high, just how low can we get? I wouldn't be surprised if the support trend we've kind of started here has kind of developed. I think that we really could see Bitcoin move to the upside. I know some people are going to say, Tim, isn't that a bear pennant right there? Couldn't we see if this is a big wave down after this boring wave? Couldn't we just go ahead and make this move down? We definitely could. Definitely could. The way I'm choosing to view this right now, if you're asking me what my opinion is, and you guys are here watching my show, so I'm assuming you guys want to know what my opinion is. My opinion is I think we actually make this break to the upside closer towards 80K. One of the biggest reasons why is because of this. I made a video last week where we hit 5. We tied the lowest ever recorded Bitcoin Fear and Greed Index on alternative.me. And alternative.me is not the only fear and greed index. It is the one I think is the most popular one. It today is only at a 12. And you can see, while in the past, let me scroll down here, and I'm going to change how we're looking at this. Let me go to a different screen here where you guys can see more of what's going on. And I think I have to zoom out here just a little bit. This isn't the only time recently we've been low. Let's go to a 3-month perspective here. You can see we got really low back in December as well, coming all the way down to 11. Even before that, we got here to 11 as well. I think we got to 10 technically back here in November after those big crashes. But notice before we made another move down, we had to get out of the extreme fear. We spent a lot of time there. That's why we were so boring. But we had to pop back up into neutral and even slightly into the greed, and then we're able to come back down. Take a look at the price action and how this worked, right? We did hit a 10 right back here somewhere. Again, I think November is where we hit it, had a little spike up, got a little higher, drop down, we hit a 10 again, and then we had this nice boring sideways action where we didn't top out until here in January, where once again we briefly got into the greed. Of course, now we've collapsed. We come down here. We have set the lowest ever recorded, or the tied for the lowest ever recorded 5 on the fear and greed index, but we haven't really showed much greed come back in. What does this mean in a nutshell? This to me signals I don't think the bears are able and wanting to make the push right this second. I think this is something, the way I'm trading this right now and the way I'm handling my investments is I'm anticipating this triangle to actually break to the upside. I wouldn't be surprised if we end up seeing some sort of a lockstep like this, or maybe we stay in some sort of zone here on our way back up towards $80,000, right? We could make this bounce a couple times. We hit our 80K, and then that's when we make our bigger move to the downside. So let's keep an eye on that. I'll keep you posted. Again, if you're watching the show daily, if you're watching our content, you will be kept up to date with everything that's happening there. But for now, how am I trading the markets? How am I investing right now? I am not in long-term swing longs. I am longing the markets because I believe we hit some major local bottoms, meaning for a time period, we want to start trending back to the upside. But I'm just going to be very surprised if we break through this 80K range, which goes back over here to this high back here, the low back in November. I think there's a good chance we stay below that level and we make at least one more good swing move down towards 53,000. Okay. That's how I'm trading this right now. There's a lot of money to be made. If you guys are wondering, Tim, these markets have been abysmal. How are you even still here? How do you go live once a week? How do you make 4 videos a week for us making content? How are you get tired of this? I'm finding ways to make money. And one of the reasons I make money is because I have this phenomenal indicator right here, which is called our flow signals indicator. And you can see, if you learn how to use this, there are perfect buy and sell signals that have kept us going. In fact, even this morning, we were able to enter some longs. We went all the way down to the 15-minute chart. Actually, we started on the 5-minute chart, but we were able to long down here and make a trade. We entered around 67.3. We took profit up here around $68,000. If you want to learn how to trade those, check out the VIP trading group. I'll tell you what, even better, when you use the exchange I use, it's called Toobit, right there, the bottom third. When you use Toobit, the link down below, you get VIP level 1 fees. This is the #1 exchange out there. Fantastic customer service. Just deposit $100 or more into an exchange that you make under our link, and then send that information to our email. You will get free access to my live trading sessions where you can see what I'm doing. And in a couple of weeks, just so you guys know, I'm going to be doing a 10X challenge. I'm going to turn in a period. I'm hoping to do it in a matter of a couple of weeks. I'm hoping to get in a month. I'm going to turn $100 into $1,000. Then later on, we'll take some time. We'll try to turn $1,000 into 10,000, 10,000 to 100,000. Heck, maybe we'll then after that do the 100 to a million. And I want to show you guys what trading looks like and how no matter whether markets are bullish or bearish, there's always a way you can make money if you know how to respond to the macro news, if you know how to read the charts, and effectively also if you know how to use proper risk management. Some of you might be saying, Tim, you've made some calls on this show, on this channel that haven't always come right. You're absolutely right. I'm not going to stand in front of anybody and try to tell you guys I have a perfect track record of trading. You know what I do have though? I have proper risk management, and I have the risk overall perspective to understand I'm not going to win every trade that I enter. But if I minimize my losses, if I only lose a little bit of money when I'm wrong and I make a lot of money when I'm right, that's what makes me a profitable day trader. I'm going to show everyone in my VIP trading group how that gets done using these indicators. So let's check that out with Toobit. Let's talk about the big news of the day, though. If you guys didn't see this, a joke, it's a book. Let me just show you as I hit the scroll button. This is the breakdown. Very clean order right here. It's official. The world order has broken down. Just if you have 30 to 45 minutes that you want to sit down, I don't even think we're halfway at this point. If you want to sit down and read this entire report, again, I'm calling it a book. It should have a hardback copy of it. If you have 30 to 45 minutes, go for it. I'll be honest with you guys. I didn't read every word for word. What I did was I went paragraph by paragraph, and every time he kind of got into something he said before, it was very clear where he was going, I skipped to the next paragraph. But if you don't have time, if you're sitting here saying, Tim, this is why I clicked on the video, I wanted you to tell me what's going on. Let me break down for you what you really need to understand about what he's talking about. There are 3 big takeaway points. These would be the cliff notes. I have them written down so that I don't forget them, but I'm going to read off screen. Number 1, the post-1945 rule-based world order is officially dead. This, of course, is talking about what happened post-World War II. As declared by the leaders in the Munich Security Conference, ushering in an era of great powers of politics where might makes right, freedom is no longer guaranteed as the old security structures no longer hold. We had all these agreements pretty much saying, hey, we'll cooperate with each other, we'll trade freely, but that's going out the window. Effectively, what we're going to get back into is it doesn't matter what's morally right or wrong. It matters who can do what. Might is better than right is where he's saying we're going. By the way, I should probably stop here. I want to break this down in a couple minutes. I'm not saying these are my perspectives. I'm not saying these are my views. I'm saying this is what Ray Dalio just posted. And if you go back over to his post here, Oh man, okay, yeah, I'm just now halfway, 45 minutes. You can see the views that this thing got. Let's go back up here. 70.1 million views already on X. So it's not like one or two of us have read this. A lot of people have engaged with this post. What's he saying? He's saying the big thing that you need to look out for, and we're seeing ripple effects of this, by the way, is that all of a sudden countries that have been allied for a long time, they're going to stop cooperating with each other. There's going to be a loss of moral value, and it's going to be more about, well, I'm bigger and stronger than you are, so I can do what I want. Okay? We've seen some of that happening. Does this mean Ray Dalio's right? We'll have to wait and see. What's his second big takeaway? What's the second big point? This breakdown aligns with stage 6 of the big cycle. I'm not going to get into stage 6 because it's all in the report, but marked by escalating disorders, including internal conflicts like civil wars or revolutions. And we haven't seen a large-scale civil war or revolution in any major country, but we've seen some in smaller countries. And no matter where you live right now, I think even a lot of the big countries, you start to see rumblings and unrest that feel like the beginning stages of some form of a civil war or a revolution. He says these will start to happen. External clashes among great powers will be driven by 5 types of war. Write these down. Trade economic war. Sounds similar. Technology war. Geopolitical war. Capital, and potentially at the end, that's when military comes in. War doesn't start when bullets start flying. War doesn't start when bombs start. War starts with trade, technology, geopolitical tensions, capital, and then finally, when everyone likes to get worked up about war is when there's actually bullets and bombs and everything else. Very interesting stuff right there. The third thing, though, this is the big takeaway. You might be saying, Tim, cool stuff. What does this mean about investments, though? Ray Dalio, again, one of the largest hedge fund managers in the world. What is he saying about investments? In other words, he says, investing-wise, avoid holding debt or assets in devaluing currencies, right? So if you're in major debt and you can find a way to pay it off, he would do so very quickly. Don't go into devaluing currencies. So let's start off with fiat. Let's go into other currencies. Guys, there's going to be cryptocurrencies. Certain cryptocurrencies for sure you should stay away from. I don't know which ones Ray Dalio thinks you should stay away from. He didn't include those in the report, but he is right that especially the more speculative currencies of any type, fiat currencies that don't have strong backings, you want to stay away from these things. Wars and crises are financed through borrowing money and printing. So that's your answer to get away from fiat currency. Instead, favor hard assets. And he gives one specifically, he says, like gold, to preserve value amidst rising power, competition, and financial instability. Here's what he doesn't say. He doesn't talk about Bitcoin necessarily. He doesn't say go buy Bitcoin, but he talks about the struggle in wartime is that you'll have these sanctioning events that happen. You'll have, again, it starts off with trade, economic, and technology confliction. They'll start to confiscate money. They'll say, you can't operate in this type of trade deal. We're not going to accept your money. You're not allowed to have this form of money. What is the only currency in the world that is actually saved from that type of movement? It's Bitcoin. It's cryptocurrencies. Right? I'm not saying every cryptocurrency out there, but while he doesn't say it, Ray Dalio's report actually signals get into something harder, stronger, and something that governments can't actually come in and sanction control. They can try to pressure different people, but with Bitcoin specifically, who are you pressuring? Right? I could go to Ethereum. I could go and try to pressure Vitalik Buterin. Hey, don't let this country operate with Ethereum. Do your magic and shut it down. Who are you going to prevent a country from using Bitcoin? Who are you going to prevent a whole people group from using Bitcoin? You can't. And I'll tell you one better. And I'm interested. You guys let me know in chat. What do you guys think about this? But I'll tell you one better. If you're wondering and thinking, man, as this is happening, what are the governments doing? I mean, I'm not going to release any secrets here. I'm just kind of showing you with actual data of evidence. If you think, man, is the U.S. government potentially just selling off early and just lying to us? No, because here's one of the cool things about Bitcoin. It's transparent. We know what they do with what they have. The U.S. government holds more than $20 billion of Bitcoin, and they are holding all $22.5 billion of that Bitcoin. What does this mean? Arkham says U.S. government is bullish on Bitcoin. This is no secret. If Ray Dalio is right, and if this is where the world is headed, the government has known this for years. They are ahead of everything that we know. Anytime you know something, the government probably knew it years ago. So why aren't they selling off crypto? Why are they aggressively holding on to it, despite the fact that Bitcoin is down more than 50% at the moment? Because they know something. It's actually not down quite 50% at the moment. It's a little less than 50%, but it was down more than 50% is my point. They know something we don't know. I also love to say this to people. I know right now there's this sentiment feeling out there that crypto is terrible. It had its run, but it's now over. The institutions have come in and they've ruined the whole thing. Historically, that feeling of despair, anger, regret of investing in an asset, historically, that feeling comes at or close to bottom positions. And I'll tell you this right now, if everything was so terrible with the markets, the institutions that are involved with manipulation, by the way, and the large whales, they would want to recreate. They do everything in their power right now to change that sentiment to make you bullish. And they want you to be more hopeful about cryptocurrency. I don't know if we have been in a time where it seems more hopeless for cryptocurrency. And while that feels like the emotional response is, let me leave, when you look at what's coming down the picture, when you even look and break down what Ray Dalio is saying, and then you watch what are institutions doing rather than saying, they're revising down all their price predictions, saying, oh, the crypto is not that valuable. They're getting a lot more quiet about the long-term perspective of crypto. Why? Because they know retail's tired. They know retail doesn't want to buy. They want to buy as cheap as possible. So they keep the sentiment so negative so that no one comes in and puts a lot of buying pressure on the market so they can get as much of it at cheap levels as possible. And then boom, you turn the table here. They know the dollar's dying. They know they're in trouble. The elites will keep their wealth. They're going to transfer it into something that can evade all of these war tactics that Dalio talks about. And they get to continue to be wealthy, while us, the regular people who have just sold all of our cryptocurrency to hold US dollars, all of a sudden, all of our value gets blown away to smithereens. The dollar inflation continues to go crazy high. Everything begins to obliterate. In a wartime, again, they will print into oblivion, where $1 will be worth what today's 5 cents is worth in the future if Ray Dalio is right about this issue. They will print into oblivion. You got to remember, there were days where people were buying houses for like $100. There were days where people were buying thousands of acres of land for like $1,000, right? Those days are gone. Why? Because inflation has just reduced the value of the dollar. And we think it's bad now. We're not even close to how bad devaluing the dollar can be. And it's events like this that can do it, but this is where crypto, Bitcoin specifically, but I do believe there are certain altcoins out there as well that can be massive, massive, massive value holders. I think the institutions know it. I think they don't want you to be bullish right now, so they're doing a great job of not inspiring any hope whatsoever. But that's what we're here for. We're here to kind of work through that chaos and help you understand better the big picture of what's going on. I'll tell you guys, and I've been very honest with our community. Anybody who's in chat who watches daily, you guys know this. Every time a big asset manager comes out extremely bullish, every time a big bank CEO comes out and talks about how great crypto is, I get bearish in the short term when that happens. When JP Morgan does it, when BlackRock does it, when any large official does it, I tell you guys, I say, that's not right. Like, that's not the hope we're looking for. These are not the people we can trust. I'm going to be a little bearish on this. But in a season of time where they're very quiet, they're not instilling any hope, that makes me think the little rabbits are working behind the scene and they're actually trying to gobble as much of their supply as possible. Doesn't mean the bottom's in, but I do think it means the bottom is close. So, you know, that's what I'm believing. That's what I'm doing. I'm not here to tell you what to do with your money. I'm here to tell you what I'm doing with my money. If you want to follow it, learn a lot more, hit subscribe, hit the like button, make sure you're following our stuff. But that's what I'm feeling right now. Let me know in the chat down below. What do you guys think? First of all, what are your thoughts about Ray Dalio and his report, his book he just put on X? And also, if he's right, what assets do you think that we need to be investing in right now? I think gold is pretty obvious. Ray Dalio lays it out there. I'm not going to disagree with him on that. What else do you think you should be holding if another war happens? If the whole world goes into chaos, what currencies should you be holding to protect your hard-earned value? It's not money. Money is just a thing. It's value. Your time, your resources, it's all valuable. How do you protect that value? It's not the dollar. That I do agree with Ray Dalio on 100%. Okay. Let's see. Was there anything else to be aware of? I wanted to kind of bring this up. This is going to be a very big deal. I think it's going to be very interesting. Last week, we did have some good numbers with inflation. We talked about it Actually, we didn't even mention a video because it happened on Friday. My video on Friday was about something completely different. So if you missed it, inflation came out to 2.4%. So inflation is down. Today, I saw there were reports of employment numbers being revised once again, effectively saying, yeah, those reports that told us unemployment really wasn't that bad of a deal. No, that was false. We actually had like over 1 million jobs less than what we reported. So unemployment numbers seem to be creepily a lot higher than some people think. And we've been kind of saying that. I think anyone who lives in the real world knows the job market is not good right now. Inflation not looking too bad. What does this mean? It means we should probably be looking at rate cuts. The problem is when you go to Polymarket, there's still a 93% chance or probability that in March, on March 18th, we probably will not cut any rates. But I think what we need to kind of do is move forward with this thinking and say, you know what? We only have a couple more months of Jerome Powell. Like him, love him, hate him, I don't care. He's going to no longer be the chairman. Whether he resigns or stays on, I don't know. I don't know if anybody but Jerome Powell knows this. But we will have a new chairman. At this point, the front runner, the person that's been nominated, is Warsh. Warsh is not necessarily a QE guy, but it does sound like he's a rate cuts guy. It sounds like, especially if he sees low inflation and scary employment numbers, he's going to slash rates. So to be honest with you, I really don't care about March or April cuts with Jerome Powell. Do we get them? Cool. Do we not get them? I don't care. I think the bigger question is, where will we be at the end of 2026? Will we be extremely high still? Do we only get 1 or 2 cuts in 2026? Or did he cut it 4, 5, 6 times to bring the interest rates extremely low? We know that Donald Trump has said recently he wants America to have the lowest interest rates of any country in the world, and he's the one appointing Warsh. So I just find it hard to believe that he's going to appoint somebody who has no purpose or no thought process to enact his thoughts and his desires, right? So you got to think, whether Warsh is a QE guy or not, he's probably a rate cut guy, right? Unless there's something other trick going on and lie going on. That's where I'm kind of at right now. So as I'm looking at inflation numbers, I'm looking at unemployment numbers. We know we're getting a new Fed chairman. I still think there's a good chance. I still think there's a pretty good chance that we end up seeing more rate cuts than what are currently being projected. But let's watch how this plays out the rest of the year. In a nutshell, I'm going to kind of wrap it up here with a couple of charts very briefly. I'll answer a couple of questions, and then we're going to go ahead and wrap up the show today and let you guys get back to your President's Day. I already told you guys Bitcoin. What am I watching right now? I do still think short-term move to the upside, but I still have this feeling we have one more crushing blow to the retail spirit. I think 53,000 is still a very interesting level. Done a lot of analysis on this one in past videos, so go check that out if you had a chance. If you want to know why I'm thinking 53,000, I have some content on here. There's a price prediction for Bitcoin. I talk about that. Otherwise, though, I'm looking at some long positions here on Bitcoin going all the way to 80K. If you want to know exactly how I'm handling my buys, my sells, my take profit levels, where I'm putting my stop losses to protect my value, teach all that every single day in my VIP trading group. After that, I'm looking for a move down here towards $53,000. Let's take a look at some other things here. It's going to be very interesting to watch how the SPY ends up interacting. We did lose a support level here a couple of days ago. We bounced back up, hit resistance once again, and now last week to close the week out, we got back down below that level. There's a little bit of a trend going on right here. I've been telling you guys, I think the S&P 500 is a little cooked. It's a little high. It's kind of screaming at us on longer time frames. Like if you go out to the weekly chart, for example, kind of screaming at us bearish divergence, right? The RSI and oscillators are trending down. The prices were still trending up. This is just screaming, not a major crash, but a correction is still needed. And I've kind of talked about 650 being a very interesting level to watch for a 10% move. Is that 10% or 15%? Let me take a look at that real quick. I got my numbers there exactly. But 650 is a very interesting zone for me. That would be a move down here around, actually, I apologize. 650 was only down here to 6. I said 10%. So we're actually talking about, I think 600. 627 is where we're kind of actually looking at those levels. There is going to be support here at 650. So that's why I think I said 650 before. But don't be surprised again. If the S&P 500 gets a nice correction here, there are some economic things that are causing some people to be weary of the stock market. I'm going to be releasing a video. I don't know if it's this week or next week. I think we got to do some planning on it. But I'm going to talk about which stocks I do think are longer term buys right now. Not that the bottom's in, not that I'm saying you won't be in loss for a period of time, but when you start thinking about longer term investments, We talk very much on this channel about long-term crypto investments. What are you looking at from a fundamental side? We're going to make a video where we talk about the long-term fundamental outlook of the stock market as well. Some stocks will crash and burn. Other stocks will make a big move to the upside. But as a whole, the whole market right now is overtopped. Even this whole thing going on about the Dow being over 50,000, it just, I don't know about you guys. Let me know in the chat. Didn't that scream top signal to you as well? I don't know about you. That's how it fit to me. With Pam Bondi and Trump just on this tirade about, oh, the Dow's over $50,000. I'm not saying I don't believe we can't get over 100,000, right? We could go up. I just think the screaming about it on TV had a top signal feeling to me. I think it's time for a nice pullback in the stock market. So don't be surprised if that kind of correlates with Bitcoin and crypto prices dropping low as well. Another thing to keep an eye on when we're looking at metals, gold, it's holding well, but it's kind of lost some sauce a little bit. It's getting very boring here, kind of hovering around $5,000. Doing a little better than silver, which is below $80, but gold doesn't have the same boom right now. Same thing we're talking about there, though. I do believe there's a decent chance as stocks begin to drop, and then the next time crypto drops as well. I mean, I think we could see some boring gold action here, and then all that stuff happens, money goes into gold. Now, the real question is going to be, and we're going to have to watch how this looks, how the charts look and everything else. The real question after that is when crypto does start to make a rebound, when the institutions finally do decide, let's start rolling some money into crypto, is that money coming from stock profits? Will they roll some gold profits as well? And then all of a sudden you get gold back up here, but then it starts to drop against crypto. It'll be very interesting to see how that plays out. I would tell you right now, I would still have gold in your portfolio. I think every time you bounce back up here, taking some profit is still a good idea, but I don't think that gold's about to enter any type of major bear market. Again, Ray Dalio kind of lays that groundwork very well in his X book, where he says, this is not a chart we're looking at crashing. This is a chart that could still be going super high to the upside. But for now, it's not like we're making any massive run on gold. I would look for a little volatility. You get a swing, you get negativity on gold whatsoever, I'd be looking to scoop some more up on there as well for the long haul. I just think you still want to be adding for the long haul some crypto to go with it. That's going to wrap up the show here for today, right? I love having you guys in here. Smash like if you guys have enjoyed this, and make sure you're subscribed to the channel. Let me look at a couple of questions here. Bronco Landing said, great show today. Hopefully we chop a little longer from here. Bronco, I think you're going to get your wish there. I do think we're going to have some more chop here. I don't think that we're in a season where the market's going to really declare what it wants to do on the macro perspective, right? In a bear trend, you have these period of times of upswings. So as a trader, we love this. We can find ways to make money. As a long-term investor, you're getting very confused right now. Some of you are buying because you're like, maybe it's the bottom in. It's like, well, maybe the bottom's not in, but we have a little bit of time to the upside. It's a better time to be trading than it is to be investing long-term. I can kind of get away with it. I've been investing since back in 2020. So I have long-term portfolio that's just not even close to being in the red. So I have my bag that's like long-term, don't touch it. I don't care about volatility. I don't care if Bitcoin were to drop to 30K, 20K. I'd be like, listen, this is Bitcoin that I think is going to one day be worth millions and millions and millions of dollars. What do I care about little volatility here and there? But with another portion of my portfolio, this is absolutely a time to look for the right signals to know when to buy, when to take profit, and occasionally with certain assets, when do we even take some margin, some leverage, and we trade against the market to short it to pick up some money. Again, I use Toobit to do this. This is a great exchange with, again, low fees that you can leverage trade, margin trade cryptocurrency. You can margin trade and future trade stocks and metals all on Toobit and find ways to make money. In fact, I'll tell you this right now. This is probably one or two more questions, but someone asked me the other day, Tim, it seems scary though to short. It seems like you're going to be in problems. And I'll tell you right now, especially trading assets I hold, this might be a weird thought for some of you, but I actually love shorting certain things. Like from time to time, I love shorting Bitcoin, for example. And that seems weird. It's like, no, Tim, don't you love Bitcoin? Don't you want to see it go up? No, I love shorting Bitcoin if there's a good reason to. And the biggest reason why, Curious George in the background right there. Good stuff. The biggest reason why I love shorting is because I put myself in what I feel like is a win-win situation. And what I mean by that is if the markets start to move back up and my stop loss gets hit and I lose money on my trade, guess what? My long-term portfolio made a big move. So I'm going to put that stop loss somewhere that's like right now, if I were to short, I put the stop loss at 80K. I think that's a hard level. But it's like, okay, yeah, I lost a little bit of money. I lost a little bit of money trading, but my long-term bad is getting bullish, and we're breaking into a more bullish structure. I love being wrong, right? But let's say I'm right when I enter the short, and my long-term portfolio drops. Guess what, though? If I make money in my short trading, I just picked up a whole lot of cash, a whole lot of dry powder to go buy that dip. So don't be afraid of shorting. If you don't know what you're doing, if you don't have a plan, if you don't understand support, resistance, and how to do things, yeah, maybe you should be afraid of it. Don't dabble in it. But I can teach you if you'll join that VIP trading group. It's very easy. It is, again, one of the best feelings in the world is entering a short against an asset you believe in long term because you win either direction. Iceman, Tim, you've predicted a super cycle, 100%. And while we are currently in a bear trend, I'm not going to fight that bear trend, this is going to sound crazy to some people. And you know what? I've gotten to a point where, first of all, my identity doesn't come from this channel. I love doing this channel. It's what I do full time. I day trade. I make content. I try to help people as much as I can. Doesn't mean I'm always right. Iceman, doesn't mean I'm always right whatsoever. But at the same time, my identity is fully rooted in my relationship with Jesus, in the fact that I'm more worried about what my wife thinks of me, what my kids think of me, and what people that I know in my life, they think of me. I want to be a man of integrity and honor, and sometimes I get things wrong, and that's going to happen. Doesn't mean I don't have stop losses. And I want to be very clear with you. I still don't know if I'm wrong yet on the super cycle. It doesn't look like it's going that way. But at the same time, things always seem to shake out very weird ways. There's periods of times where people get things wrong for a small amount of time, and then things flip around and they look brilliant. Okay. I've been on both sides of that, right? I've been on sides where I make a long-term prediction and look ridiculously stupid for a period of days or weeks. And then it turns out I was right the whole time. On the flip side, I've made periods where I make a prediction and for a couple of days, it looks really good. And then everything flips around on me. It's like, oh, that was a bad call, right? So that happens to the best of us. But my overall point here is the super cycle prediction has a lot more to do with how I think cycles overall will go, and the fact that I think that this bull market is the change from retail dominated movements of money in crypto to institutional adoption of crypto. And the biggest reason I've been wrong is because the institutions are taking way longer than I thought they would to finally bite down and start going heavy into crypto. And the reality is because they're waiting on the Clarity Act, and the Clarity Act keeps getting pushed back and back and back and back. But let's wait to see how the rest of the year works out. Let's wait to see how more things happen. Because, for example, if we were to bottom out, let's say in May or June, and then start to explode in the fall because institutions are pouring their wealth in, and then retail comes back in, and all of a sudden we're starting to push those all-time highs again around the time period we were supposed to be bottoming out in the bear market, I'm not going to rub it in anyone's faces. I'm not going to tell people, oh, you were so wrong to be in the 4-year cycle. I'm going to just say, listen, these are things that I thought would happen because we're in a different market than we've ever been in before. And I'll tell you this, the 4-year cycle, I think is not going to happen. Maybe it will. But I think a big mistake of analysis, I think looking at the past and saying, hey, last time we were in a very similar position, this is kind of what went on. This was the feeling of what went on. I think it's good to remember the past and to be aware of the details that affected price action. But people just blindly saying, well, the last time we were in a bear market, it took this many days and the price action looked like this. I think that's a big, big, big mistake. Because one thing that you could easily say, let me show you real quickly. When you go back here, I'm going to show the Bitcoin chart. We're going to close off with this one. Every single bear market and every single bull market, didn't mean to draw there. People like to look at the last one and say, oh, we're going to play out exactly the same. Okay. That's not always how it works. Right. Some of you just say timeline, but like, take a look at this period of time right here. I'll just draw it, right? Take a look at this period. We'll do the macro perspective. Or let's actually go to 2021. Let's go to 2020, 2021. People like to take the drawing here and be like, the last time we had a bull market, we had this very clean run, followed by a correction, followed by a big run, correction, big run, and then the bear market started, right? So we must do the same thing in this one. And it's like, no, we didn't do the same thing at all. Last time people said in 2021, oh, we can't have a blow off top for the bear market. We can't have a rounded top because we always have a blow off top. We didn't have a blow off top again. Not a single bull market looks identical. Not a single bear market looks identical. Sometimes these cycles can rhyme, but rarely do they ever copy and paste and look identical. So these people who are saying, well, look at the bear market of 2022. Look at how we had this big move down, and then we had a little bit of hope, and then we had the bigger move down, and then we finally bottomed out. And so their thought process is, well, we have to copy and paste this and do it in this one as well. Again, I warn you, rarely do we copy and paste these types of moves. It can look similar, but we've never once seen bear markets look identical. We've never once seen bull markets look identical. So we have to continue to use our proper analysis and judgment to analyze how these things are going. And again, the last thing I'll say here is, while I understand based off the 4-year cycle and the halving events, why we had time periods of bear markets, and it's like always like 1 year time period for a bear market, I want you to really stress your brain on this one and think for yourself. Don't trust my word for it. Don't take my word for it and just say, well, what Tim says is the gospel truth on crypto. That's not true. You need to think for yourself here. If the 4-year cycle is based off the mining halving events that happen every 4 years, and it's based off the significant impact of cutting the mining rewards in half, at what point does having things become insignificant, right? 100 to 50, you lost 50. 50 to 25, you lost 25. 25 to 12.5, you lost 12.5. 12.5 to 6.75. I'm not going to go. Every time you halve something, the loss of it becomes less significant, less significant, less significant. Right now, Bitcoin has almost 20 million tokens in circulation, only 1 million left to print, so less than 5%, and we have over 100 years to print all of it. So is mining difficulty like that really the driving factor of price? Also, the Bitcoin has always been driven by retail investors. Bitcoin's price has always been controlled by miners who know better than anybody the right times to buy and the right times to sell. So the 4-year cycle made so much sense during that time period. But who controls the price now? It's not the miners, and it's not retail. Retail didn't even show up for this bull market. It was the bull market of apathy. The people controlling the price right now are the ones that run the ETFs and the institutions who are holding pause before they get the green light to take their trillions of dollars and invest in the industry. It's the institutions who care. They don't care about mining rewards. They don't care about the halving event. They care about making money, dumping at the right times when they can make money, buying at the right times when they can make money. So the 4-year cycle theory, it just doesn't check the box for me of being the logical explanation for when we're bullish and when we're bearish. All right. So let's put a pin in the super cycle thought process, right? I'm just trading right now. I'm trader Tim. Super cycle Tim might be right, might be wrong. But what we're going to have to wait to see is, are we in a period of time where the super cycle doesn't look likely, but all of a sudden it rips out of nowhere and officially the 4-year cycle is dead? Or am I going to be completely wrong and we have the full year 4-year cycle happen again and we have to wait until October to buy? Either way it happens out, guys, I'm going to be ready. I'm going to have my long-term bag ready to go. I'm going to be trading the markets, buying and selling when the signals pop up. That's one of the best things about charts is charts don't care about your opinion. Charts don't care about the news. Charts tell you what's actually happening. When is the volume getting high? When is the volume getting low? When are things flashing overbought? When are things getting oversold? Where are the buy signals popping up and where are the sell signals popping up? That's how you make money in this game, despite all of the chaos. So that's what we have right there, guys. That's all I have for you in today's show. Go have some fun with your family today. Remember why you guys are even investing and trading in the first place. It's not for the fun of it. Sometimes trading is not that fun. We're here to create better lives for ourselves and our family members. So go spend a day with them. Have some fun. Come back tomorrow. We'll have more content for you. Smash like, hit subscribe, and if you don't mind, hit that notification bell so you don't miss any of our updates. I'll see you guys next time.